Few weeks ago, Donald Trump came out with this social media post on his platform or proposal that stated that he's going to make it a 1-year cap for credit card companies to cut their interest rates from 20 to 30% down to a 10% cap. All right, we are now 1 to 2 days past the time frame that we were supposed to see a rate cut on credit cards. Apparently, a few weeks ago, Donald Trump came out with this social media post on his platform or proposal that stated that he's going to make it a 1-year cap for credit card companies to cut their interest rates from 20 to 30% down to a 10% cap, which is going to allow millions and millions and millions of consumers here in America to lower the balances on their credit cards. As you know, credit card debt has exceeded the limit or the record so far for this year or last year. I think it's over $1.2 trillion in credit card debt that Americans are in. So one of the biggest issues that Americans have in today's world is the 25, 30%, 27% interest rate that is added back on after they pay their minimum balance or their minimum payment every single month. And it's almost impossible for these people to get out of credit card debt because whatever they pay off for their minimum payment, let's just say they're paying $100 a month. Well, $90 gets added right back. So it's almost impossible for these people to pay off a $5,000 credit card or a $10,000 credit card. In fact, the average household credit card balance for a married couple is anywhere between $10,000 and $11,000. So, you take that and someone's paying $100, $150 a month, it's going to take them 15 to 20 years at a 27% APR to pay that credit card off. So the whole idea of wanting to cap the interest rate at 10%, even 10% is still a good bit of interest. It is now going to make this, get paid off 10 times faster. However, banks have pushed back on this idea because that's where banks make their money. They make money by loaning money. Now, I look at it in two ways, one from a consumer side and one from a business owning side. So as a bank, okay, you don't just give out money to people and deserve to give it out for free and expect to give it out for free, because you're giving money to people who don't have money. Now, I'm just generally speaking on loans, okay? And we're going to get the credit cards in a second. But if I wanted to buy a home and it's $500,000, clearly I can't just walk up and cut a check for 500 grand. So I'm going to apply for a mortgage. The bank is going to give me $500,000 for the loan, and I'll pay it off over 15 to 30 years. Now, because I don't have the money, I have to pay the bank a fee, which is interest, to purchase this home or to buy this home. And if I don't keep paying them the monthly payments, of course, they just take the home, foreclose on it, etc. Now, moving forward towards credit cards, I can't sit here and say the same thing for credit cards, because the things that I use my credit cards for, I already have the money for it. So people that use credit cards, you can't use the same situation stating that they don't have money. They 9 times out of 10 use the credit cards to their advantage and get the free rewards. Now, for the people that max out credit cards and they just get reckless with spending and can't control their monthly budgeting, or something triggers in their head and they have a credit card and they just assume they can spend more because they don't see the physical dollar coming out of their bank account. I understand that. For those type of people, this is where credit card interest kicks in and how the banks make money, because when they don't pay off $1,000 and the bank is charging 27% on that $1,000 every single month, the bank is making free money from loaning out their money. It is a service. Me today, if I wanted to open up a money lending service, and if I open up some payday loan service or something like that, and if I gave $300 out, I'm expecting to make $450 back, because that's how I'm going to stay in business. I can't continue helping and loaning money to more people if I'm not making profit. I will go out of business. So looking at it from a business owning standpoint, you stating that a company has to cut their fees, I get that. But you stated that they have to cut their fees down in half because they're making too much money and the American people are in trouble. Well, who's that to blame? The banks or the consumers that use their card incorrectly or irresponsibly? Now, people use their credit cards for an emergency. So that's probably where the president is coming from. People have hospital expenses. People have unexpected inflation, with the grocery prices and things like that. So it's costing more for people that's already living paycheck to paycheck. And I get that. The 10% can really help those people. Now, when it comes to the American people side, the consumer side of things, yeah, cutting the rates down to 10%, I was for it. I wish that happens. I still wish it happens. I mean, going from 25 to 30% APR down to 10%, the banks are still making money. You guys are already $1 trillion industries, or businesses. So I don't get the whole point of them getting or giving so much pushback on this, because they're already rich. They're already wealthy. So, but more of the story, long story short, this is why I don't get involved with politics so much, because you really don't know what's going to happen. And these presidents, they can come out and say they're going to do this, they're going to do that. Here it is, we're 2 days past the deadline that banks were supposed to be fined if they're charged over 10%, or they were supposed to cut their rates instantly. We're 2 days in, and there has been no articles, there has been no updates, no law has passed stating that banks must cut their rates down to 10%. I actually just logged into my Wells Fargo account today, and the interest rate on my credit cards are still 25, 27, 28%. Thankfully, I don't leave balances on my cards and I pay them off, and I'm not paying any interest. But, for the people that do have balances on their credit cards, that 27% APR is still active on your card today. And like I said, we're 2 days past January 20th, or I think it was the deadline was the 19th, and it was supposed to be active on the 20th. Whatever the case is, we're past the deadline. There has been no update. And again, this is why I don't get involved with politics, because you never know what's going to happen. Until I actually see a law that passes that states credit card companies must cut their rates down to 10%, I'm just not going to pay too much attention to it. I brought it up to attention last week. I made a TikTok or a reel on it because I was excited, because I'm like, man, this is going to help so many people. But once it got to the point where it was the week of the 20th, and I'm like, there hasn't been any updates. The 20th is in 2 days, or the 20th is in 1 day. There has been no article release, no update. And I'm like, okay, this probably isn't going to happen. And here we are, 2 days in, your credit card is still at 20 something plus percent. Thanks for tuning in to this episode. If you wish to be a guest on our podcast, visit SturgisCreditRepair.com and click the podcast page to schedule an episode. If you need help with your credit, you can also sign up at SturgisCreditRepair.com and start your free trial today.
Sturgis Credit Repair. Sturgis Credit Repair. If you want a new house, call us.